Welcome everyone. This is Steven here and my co-host is Julie. How are you, Julie?
Hi, Celine. Good morning. How are you?
Fine, thank you. And today's quick topic is here it is. Let me share my screen, and here it is. Short term, short-term rental, mid-term rental, or long-term rental, which earns you more money? And the answer, Julie, will shock the heck out of you. Is not what you think. Okay,
Mm-hmm.
so let's make it. I know we talked about this topic before.
Mm-hmm.
It took us 40 minutes to present this similar topic a while back, right? Remember?
Yes, I
But
do remember. Yes.
uh,
Mm-hmm.
this podcast will limit less than 10 minutes. Okay, just being concise with our presentation.
Mm-hmm.
Okay, short-term rental. Yeah, it's very exciting. Yeah, it's very
Yeah.
popular. But it's a lot of hype. And everybody talk about it. Oh, easy way to make money, immediate gratification, etc., etc. A lot of hype. Uh,
Right.
as a reason why short-term rental is short-term. Okay,
Mm-hmm.
because because
Yes.
at some point in time, not everybody, right? Some short-term rental owners, they will do very well because they are in a right market. They have the right niche in the particular
Right.
market because short-term rental is all over the country. So you can't say he's not a good asset class. You can't say that. But a lot of
Right.
people entering in short-term rental Airbnb with unrealistic expectation, and
Yes.
they have not done enough research and due diligence, and they are getting burnt. Not all of them, but many of them. What are
Right.
your quick thoughts about the overhyped rental asset class? What are your
Well,
thoughts?
again, I think it goes back to that get rich quick mentality. Oh, I could just take my house and turn it into an Airbnb or whatever. I liken that to like owning a small hotel. Would I want to own a hotel with all the liability and all the people don't treat your property the way you do? And yeah, it is very exciting, and a lot of people are talking about it, and it sounds like a quick way. That old saying, if it's too good to be true, it probably is. So I think you have to be very careful and know all the ins and outs before you even think about doing something like that.
Absolutely. Yeah, absolutely. I agree. Okay, let's go over mid to mental. Now, mid to mental is a very new asset class. Again, I've done a lot of research on it, and some of my investors have tried it recently. And in my personal opinion, it's just our personal opinion, Julie. A lot of people can
Sure.
disagree with us, but that's fine because we have this podium, we have this podcast to discuss. Okay, uh,
Right.
people can agree to disagree. That's fine. Okay, everybody have their own opinions, but
Right.
mid rental is also overhyped. Okay,
Mhm.
it's such a small niche. You find a renter for 30, 60, 90 days. You have to find the right market. You have to, and it's just mind boggle how much the YouTubers out there, the YouTuber midterm rental experts, and there's several of them. I'm not going to mention their names.
Sure.
They their videos, they really overhyped it. Oh, just focus on traveling nurses. Just focus on insurance company. People lost their homes on a fire or whatever. They have to live
Right.
somewhere else. Or this niche is so narrow. The rental pool is so small.
Mm.
Competition is so high. It's
Right.
really difficult to find traveling nurses. You know what? Those
Right.
nurses, you don't see that many traveling nurses anymore like you do during the pandemic.
Good point. Very good point. Yeah.
Yeah,
Mhm.
so this small niche, this small rentable traveling nurses, no, they are long gone. Okay,
Interesting.
and even if the small traveling nurses are available, you're able to secure a rental from them for 30, 60, 90 days. They don't
Right.
have much money to pay you. They have a limited budget. Yeah,
Mm.
I could see they have like three travel nurses. They can share the same unit,
Mhm. That's
and
right.
you might get some return. But
Right.
with this, to me, I could be wrong. Next 5 to 10 years, I could be wrong. But mid-term rental, because it's such a small niche, it all
Mhm.
depends on what location, what property, what kind of amenities you have. But the high cost of entry, your way
Mm. Right.
you have to pay so much more for the furniture to
That's a very good point. I don't think people really realize that you do have to furnish it on a
yeah,
midterm rental.
it costs 10 to 20 grand to furnish it. And yet the expectation is a rental will get perhaps 50% more rental income than a long-term rental, you may not get that 50% higher.
Maybe not.
Maybe not. You don't know that.
Right.
There's no case history in the past because it's such a new market. Plus, the wear and tear of the furniture, people come and go. You have to, most of the time, you have to self-manage. You know how hard it is to spend extra time to self-manage a rental?
Especially if it's out of state. That can be really get a little hairy there if you're trying to self-manage something out of state. Yeah.
Yeah, especially we from out of state or long distance, you can't do self-manage a long-term or short-term rental or mid-term rental. People don't know how to do. They don't know how to do the numbers. They don't know that those people. They don't know how to calculate the vacancy factors, the maintenance factors, the all those things before you run the numbers. They don't know how to run the numbers. You may not profit at all. So the risk is extremely high. You cannot scale. You cannot buy 10 short-term rental or 10 mid-term rental that you could buy with long-term rental, right?
Absolutely. 100%.
So, yeah, again, and finally, long-term rental, the mainstream is not sexy. In fact, it's very boring.
Right.
A lot of grinding, blood, sweat, and tear. They're slow, but it is generational. Wealth building.
Very good.
You can scale. You can buy long-term rental for $50,000. You can buy long-term rental for 100 grand. You can buy a long-term rental cash flow properties for $200,000, $300,000. You can cash flow with 20-25% down payment. You can scale and you can buy in different markets. And upfront, you may not get that much cash flow compared to MTR and STR. But let me you and the winner. Okay, you and I know, you and I agree. Which earns more money? I always say long-term rental earns more money. Look at this analogy.
Hair,
versus the hair.
Yeah, it's a children's story for those of you that grew up on stories. And the little turtle was just slow and steady, and the rabbit would jump out ahead and come back, jump out ahead and come back. And then the turtle, just because he was focused and determined, he ended up winning the race. And I think that's the same thing with this real estate race. Slow and steady does win the race because you are looking at doing something over long term. You may not see huge returns in the very beginning, but over time, you just can't lose. It goes back to that one podcast we talked about with like the goose that lays the golden egg. You get golden eggs forever versus these little short spurts, and you might get some money quick, but then you got to keep with the midterm and the short term, you got to keep doing it over and over. You're only as good as your last deal. You got to keep doing it over and over again.
Well, let me ask something else. So short-term rental and mid-term rental, yeah, 2 or 3, 4 or 5 years for many of those people, those owners, it's not sustainable. Okay,
that's a better word. Yes,
it's not sustainable. What I mean by that, it means short-term rental. That's a lot of local regulations throughout the country.
That's a good point too.
They disallow short-term rentals, right? The risk is way too high.
It's a high risk. Yes.
What if your market where you're holding short-term rental bust and you have to sell the property? If you have a very large, it's very hard to keep it forever. We get older, people with those short-term rental and not mid-term rental owners, when they get older, they have to ask themselves, am I trading time for dollar?
That's a good point.
Am I trading time for dollar? Do I have enough time to self-manage 5 years from now, 10 years from now?
That's a good point.
Mid-term rental. I would say no, you do not have time because when you get older, you want more freedom and time to do the things you want to do, like traveling, spend time with your kids.
Yes.
You're not going to be a full-time or even a part-time operator go do the stress of daily monitoring of your mid-term rental and short-term rental. It's just worth it. And if that using that case scenario, people get stressed out down the road. They're gonna sell. They're gonna sell the mid-term rental, get rid of it. Market. They're gonna sell their short-term rental, and then guess what happened? No more generation wealth building.
That's true.
At the end of your life, you don't have any assets to pass on because
Mhm,
it's so
mhm.
overwhelming because it's too labor intensive. You're
It's
trading
very labor intensive.
time to labor intensive. You can't do that. The purpose of this investing is passive. You
Yes,
produce passive income and passive
right.
equity.
Mhm,
Short-term
mhm.
rental and medium-term rental give you immediate gratification. Yeah, it's
Yes,
funny,
yes,
great. Trading is a popular, it's
right,
mainstream. Everybody talks about it. It's just overhyped, and you can retire in 1 year doing mental, short-term rental. It's not that simple.
right. No, it's not. No, you're right, and I think that just the risk, we talked briefly about that. The idea on a short term, having someone else in your a different set of people in your property once a week, once a month, whatever, every 3 days, there's a very high risk that you may not the furniture and your furnishings that you have purchased may not last that long. Like I said, it's like running a hotel. Hotels have guests every 3 days. It's like and very high on the self-managing, and it's just like, do you wanna put that much time and energy? And I think you said it's not self-sustaining,
That's
not
right.
over the long period.
Yeah, long-term rental, you and I know, right? You have
Mhm,
your 6 rental properties. I have more than that. You know how
mhm.
much time we spent right now managing our wizard portfolio? 1 to 2 hours per what?
Month. Per month. Yes. It's once you get it and you get them, then you're done. You don't really worry about it because we have a strong team. The team that I work with in Buffalo, New York, very strong team. I don't worry about a thing. I don't worry about a thing. I don't. But even if something, a bill or something may come to the house, so they've said it here, I just forward it on to them, and I don't worry about it after that.
Yeah, Julie, very good point. Now, okay, let me finalize why you and I feel that long-term rental will make more money than
Right.
short-term rental and medium-term rental because why? At the beginning, you may not see that.
Right.
Because you have no cash flow, maybe even
Huh?
a couple of $100 monthly cash flow. That's it in long-term rental.
Right.
In mid-term rental, you make cash flow at 500 or $1,000 net monthly cash flow. Short-term rental, same thing. But
Right.
long-term rental will slowly catch up. Because of
Mhm.
the reason we just discussed,
Right. Yes.
if you invest over time, it's a sustainable, you can scale, and over time, the rent will increase due to
Mhm.
inflation.
Mhm.
Over
Mhm.
time, you can receive slow appreciation, 3 to 5%. You have a
Right.
then you get some tremendous tax benefits. Okay.
Mhm.
And you do a loan, 30-year fixed rate mortgage, and the tenants slowly paying off your mortgage so you have more equity down the road. And it's a generational wealth transfer, especially Julie, when you buy new construction, turnkey,
Yes.
long-term property,
Very
uh,
good.
with the long-term capital X
You're
uh,
right.
maintenance and upkeep and vacancy on to a very minimal,
Mhm.
very little repairs, very little maintenance, very little vacancy changes on a new construction, turn
Mhm.
single family home to 4 units using 20 to 25% down payment in the
Yes.
entry level market in the South and Southeast and
Right.
part of Midwest as well.
Mhm.
That is your our buy box, and
Yes.
that's your buy box, and
Right.
most people's buy box.
Mhm. Mhm. Absolutely. No, I think people just need to look at how much time are they really willing to spend? Because to me, time is a big factor. As you said, as you get older, you want to spend more time traveling with your kids, your grandkids, do the things that are important that you didn't have time to do when you were working so hard to try to provide for them. And this is a perfect business model. I make money if I'm on vacation. I make money if I'm sick. I make money if I'm healthy. I make money, whatever. If I'm at the spa, you're making money. And like I said, once you do the initial work, it's
Yep.
pretty seamless after that.
Yep, that's right. With that said, then very good point. Very well, as always. Anyway, as we conclude this and you receive any value whatsoever from this video, please like and subscribe to my YouTube channel and also put your email into our inbox or my website below you so you can become a free member of our real estate community and you will
Right.
receive daily email coming to your email inbox free on
Mhm.
all types of real estate investment opportunities, more education about all aspects of this investing, and
Right.
so you become a wealth builder. Thank you so much. See you on our next video. Bye bye.